Good morning. This is Bloomberg Daybreak Europe. I'm Joanna Bersachi in Dubai, and these are the stories that set your agenda. San Francisco Fed President Mary Daly says it's now appropriate for the U.S. Central Bank to begin easing policy, echoing Jerome Powell's view on cutting rates. More from our interview ahead. Asian shares sliding as focus shifts from the Fed policy outlook to Nvidia's much-anticipated earnings report tomorrow. Plus, Libya's eastern government says it will shut down crude exports and output as dueling governments fight over leadership of the central bank. Well, good morning, everybody, and welcome to Daybreak Europe. If you were off yesterday, welcome back to the beginning of the trading week. What we did get from markets yesterday was a bit of a mixed session for Wall Street. We had the Dow make another record high. S&P were about 0.6% away from all-time highs, but the NASDAQ index, the tech-heavy index, struggled a little bit heading into those all-important Nvidia earnings that are coming through tomorrow. We're going to be discussing more of that on the show. But as you can see today, futures are leaning towards the green when it comes to Europe. We've got European stocks futures tilting to open about 0.1% higher, FTSE 100 about 0.4% higher, S&P not doing much, and then the NASDAQ leaning towards green as well. But let's switch over and talk about other assets on our radar. One of the major themes that we've been following is the market pricing, of course, of the Fed. And as that pertains to U.S. interest rates, we're still sitting at around 100 basis points of cuts priced in from now until the end of the year, which makes it for a little bit more than 25 basis points cut per upcoming meeting. Perhaps they go for 50. That is what the market is expecting. The dollar not doing a lot today, but the theme has been one of weakness. We're down 3% over the course of the last month. And then Brent, a lot of focus on the energy complex yesterday, coming off a weekend, a high-intensity weekend of tit-for-tat and escalation between Hezbollah in Lebanon and Israel, had a somewhat of a constructive impact on the energy complex. But what we really saw later in the afternoon was the impact from Libya disruption, supply disruption coming through there. That pushed up the price of oil more than 3% throughout the course of the day yesterday. And even though we've come off a little bit now, the Libya disruption is quite real and will have an impact. So we're going to be talking more about that on the show. But let's push on and talk about how Asian markets are faring in Singapore. Avril Hong is standing by. And Avril, just give us an overview of what you're watching this morning.
Yeah, Jumana, we're seeing Asia stocks mostly in negative territory. Infotech is the sector that is the worst performing. We're seeing the chip makers down. The drags on the benchmarks are the likes of TSMC, and perhaps no surprises given how we're really seeing investors turning a bit more cautious ahead of Nvidia earnings later in the week, the marquee event, and particularly these chip names that have their fates really closely intertwined with their U.S. counterpart are the ones that are languishing in trade today. But note as well that trading volumes are lower than usual this time in the session. So it gives you a sense of how investors may be sitting on the sidelines ahead of what we're going to get later in the week. The Nikkei is a bit of an outlier, but we did see those declines a day ago. And we're also seeing a bit of a weakness coming back slightly on the Japanese currency. Now let's flip the board, because as we talk through what we're seeing in the tech space, in the region, we are also focusing on what we're seeing among the Chinese e-commerce names. Overnight, we got Pinduoduo. This is a Chinese e-commerce firm listed in the U.S. Its stock crashed 30% after, it was supposed to be an e-commerce darling that had strengthened its overseas market, and there was a lot of potential. Market cap eclipsed the likes of Alibaba earlier in the year, but ultimately it succumbed to the weakness in its home market as its revenue missed, and we also saw it warning of sales slowing. So that is dragging the sentiment among the Chinese e-commerce names listed in Hong Kong. Your Alibaba's, JD's 5% down. Just a reminder of weak Chinese demand, and that is despite the Hang Seng Tech just a day ago managing to clock gains after we heard from Powell at Jackson Hole. Jumana.
Avril, thank you so much. Well, San Francisco Fed President Mary Daly has echoed Jerome Powell's comments that it is time for policy adjustment.
Well, to my mind, we've been on this path of ready to adjust policy rates for several months. We just needed to get a little more confidence that inflation was truly on its path to 2%. And I wanted to see the labor market come into balance, but I think that's completely happened. And the risks to our goals are now balanced, and the time to adjust policy is upon us.
Well, another dovish voice to add to the mix. Let's get more from Bloomberg's MLive strategist, Mark Cranfield. It appears as though that Mary Daly is also on board for a rate cut. But looking at market pricing, we've got about 100 basis points of interest rate cuts priced in by the end of the year. We've only got 3 meetings, which, if you do the maths, implies that some of these meetings are pricing in more than 25 basis points. Is that a possibility?
It certainly is. There's still enough data to come to settle that argument. And it's really about how far behind the curve the Fed is, or whether they're behind the curve at all. And they'll probably be a little bit frightened by what they see in that Chinese consumer information that Avery was just talking about. If China's consumers are starting to weaken, that may well spread across to the United States. And that has been a strong part of the US economy. We're seeing cracks appearing in the jobs market. We've got inflation heading the right way. Well, if consumers start to buckle in the US as well, then the traders will start to think that, yes, the US really is behind the curve, and the Fed would need to do a bigger rate cut, either at the September meeting or one of the following meetings. There's still enough data to push people into thinking that 50 will be on the table for September, and it may come with the employment report. But even if we get past that, people will need a lot of convincing that the Fed can engineer this soft landing they've been talking about for some time. The market still has its doubts, and we'll get better information over the next couple of weeks.
Yeah, one of the questions that I think people are asking for as it pertains to the direction of travel for stock markets is what's more important? Is it the Fed that's in the driver's seat, or is it Nvidia earnings, which come out tomorrow? Which asset markets need to be paying attention to Nvidia results?
All of them. We have a strategist in New York, Cameron Christ, better known as Macro Man, and he's done a very detailed analysis, which is on the Bloomberg terminal today, and it shows that no single stock has had this kind of impact on the markets in the past 25 years. Nvidia alone, because of the huge swings in market cap on a day-to-day basis, it can shift the S&P 500 by 1% on its own. That's extremely rare for a single company to be able to do that. That's why the option market is pricing for such a huge divergence when the results are announced this week. Whatever happens, the market is expected to swing around 10% in either direction. Could be more than that. And that's why people are putting so much at stake for Nvidia's results. Either they achieve what they have done many times, they've beaten expectations for at least the last 2 years, every single quarter, and the stock has risen most of the time. But you can see the stakes are so high that if there's a miss, if there's disappointment, we could see a huge setback. It could send a risk-off spiral across markets. Everybody, whether you're trading bonds, currencies, or commodities, everybody will need to know about it, and they could all be on the back foot. It's going to be an extremely lively period on Thursday and Friday as Asia first, and then the rest of the world reacts to whatever Nvidia has to say.
It's very exciting couple of days coming up. Bloomberg MLive strategist Mark Cranfield, thank you so much. Well, speaking of, the Nasdaq ending the day in the red with tech mega caps sinking ahead of those all-important Nvidia results tomorrow. So let's talk more about what to expect from Bloomberg tech reporter Annabelle Jewelers. Annabelle, I was just reading a statistic from one of our colleagues saying that typically on the last 2 reporting days, over $200 billion were added in market cap to Nvidia. I mean, these are substantial numbers. What are we expecting from these upcoming earnings?
Yeah, as Mark was just saying there, I mean, Nvidia results are pretty much like a macro event these days. They're exceptionally important to traders and to investors. But the expectation here is that they're going to be fairly solid. So revenue, adjusted earnings, we're expecting these to around double from where they were a year ago. And actually, our Bloomberg intelligence team is expecting a solid beat on that. And they're expecting an even brighter outlook for the third quarter. So these are all positive factors. The AI story perhaps could remain very much intact. What else we want to know is the outlook for the Blackwell chip lineup. So this is sort of the next generation AI chip theme, and we've sort of seen delays to the rollouts of these. That's already affected the share price. So we want to know the reassurance. Can we get any of that from management as well? But as you said, a key market report for the overall direction of where we go for trading, given we don't really have a precedent for a company reaching such a heavy weighting on the S&P 500 in such a short amount of time.
Yeah. I mean, I feel like every time we go into Nvidia earnings, we keep talking about how the bar of expectations is set so high, Nvidia couldn't possibly beat. But then, of course, the last two earnings they have, and they went on to add $200 billion. The question is, how long is this move likely to be sustained? How long can they keep up this momentum of beating?
Yeah, the question about sustainability and longevity, of course, we've asked that a lot of different times in the past, but really, I guess what it comes down to is how long we can see or wait for it to start showing up on the bottom line. Because when you think about the sort of big scares of the AI frenzy, it's been when we've been hearing from big tech companies that have said, yes, we've invested in AI. We're still waiting for that investment to pay off. And that's been sort of a common theme that we've been hearing. So I guess really how long this lasts comes down to when we can actually start to see monetization and how long investor patience lasts with it. But right now, of course, Nvidia is in a very good position because its biggest customers are the so-called hyperscalers, Microsoft, Meta, Alphabet, Amazon. They're in very healthy positions. They've also got lofty valuations, and they're also locked in an arms race to dominate AI, which means that they're very, very happy to keep lining up for those Nvidia chips for now.
Yeah. Excellent preview. Thank you so much. That was Annabelle Jewelers. Well, Bloomberg will sit down exclusively with Nvidia CEO Jensen Huang. That will be on Bloomberg Technology on Wednesday at 11:30 p.m. UK time. So stay tuned for that interview if you're up that late. All right. And speaking of today, we've got a couple of data points that we're watching out for. 10:30 a.m. UK time, we've got the German 5-year auction. Interesting to see how demand will come through for that, especially given the rally over the last couple of weeks. That is the 5-year auction taking place at 10:30. Later on in the afternoon, 3 p.m. UK time, watch out for U.S. consumer confidence, just another data point that the market will be watching out for. Not as significant as the PCE, of course, on Friday, but still yet another sign and reflection of how U.S. consumers are feeling about the U.S. economy as the Fed starts inching towards that easing cycle. And at 3 p.m. at the same time, watch out for ECB speak. We get Nagel. He will be speaking, of course. He is the Bundesbank president, known as one of the more hawkish members of the committee, as expectations are building into the September meeting on a possible live meeting out of the ECB. Will be interesting to see whether hawkish members of the committee are also beginning to come around to the view that maybe it's time for another interest rate cut. And you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB, so Day Go. And here you can see our top stories for today on the terminal, talking about Fed cuts and how that could spur a 10% gain in the yuan. Mary Daly's comments that we've talked about just now about it being the time for the Fed to start lowering interest rates. And then Facebook being pressured to pull COVID content. That is our Daybreak page today. Now, also coming up, Libya could add to oil supply woes as dueling governments fight over leadership of the central bank. We'll have more on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Libya's eastern government is threatening to stop all oil production and exports nationwide. It is the latest move in a struggle with its Tripoli-based rival for control of the central bank and the nation's energy riches. Crude has leveled off after a 3-day rally, but of course we did see a big uptick in the price of oil yesterday once this story emerged. Let's get more with Bloomberg's Middle East energy markets reporter Anthony DePaula. How significant is this?
Yeah, good morning, Jemana. Yeah, this could be a big step because this the amount of oil that Libya usually produces is more than the amount of oil that the market is worried about in terms of oversupply. We've got lots of non-OPEC supply coming to the market. OPEC Plus is meant to bring back some oil back to the market starting later this year. And so the market is looking at a surplus potentially in the end of this year and then certainly going into next year. the amount of oil that Libya produces. It's been averaging roughly about 1.1 million barrels a day over the last 3 years or so. That would be more than that surplus, so that would certainly balance the market. But of course, this is a political step by that Eastern Libyan government looking to put some pressure on this central bank issue. So we wouldn't expect that they would be able to keep that oil off the market for that long, because this is really what Libya needs to run the government and pay salaries there.
It seems to me that if you want to think about the impact, the longer-term impact it's going to have on the price of oil, then the question is just how long these disruptions are going to go on for. And yesterday, straight away on the news, the price of oil upticked by about 3%. But surely where it goes from here is just a function of how long these disruptions last for.
Yeah, exactly. How long will be the key issue, but potentially we don't get clarity on that because, as I said, this is a political decision. So just as the Eastern government is making a political decision to go with this shutdown, they could reach an agreement with the other opposing government in Libya and make a political decision to restart. Of course, the Eastern government controls most of the oil, about 4, I think it is, export terminals, and the largest fields. There is a little bit that can come out of the west, so there could be some trickling through, but we've already heard some of the biggest producing companies saying that they're going to gradually bring production down. So that's also a question as to when that oil does start to come out of the market. The Eastern government has declared force majeure, so it means that they can interrupt those shipments if they want.
Yeah, I mean, if you look at the history of Libyan oil production, and we have a chart on this, it has tended to be quite volatile over the last decade or so, for obvious reasons, because of the political changes, political turmoil, different competing interests. You've got the East, the West, these finely brokered deals. And so does it come as a surprise to the market that we're witnessing yet another disruption in Libya, or is it something that analysts assume comes along with the territory?
Well, Libyan production has been super choppy. We have seen a relative bit of stability. When you look at the kind of the last decade of Libya, if you look at the last 3.5 years, we've seen some relative stability kind of since the end of the pandemic. But there are these ups and downs. In fact, we do have some outages now because of maintenance. There's not enough maintenance going in there. There's not enough work to keep up those fields and those export terminals. So these things do happen. Libya is outside of the OPEC Plus kind of quota sphere, so they're trying to give Libya time to bring that production back up. We're still below kind of the 1.6 million barrel a day level that they had prior to the overthrow of Gaddafi, prior to all the uprisings and issues that have so affected production. But they did get back to this kind of million barrel a day, kind of stable area. But yeah, I mean, people are used to seeing these going up and down in terms of Libya, so people are not really banking on Libya in terms of making their balances. So this is kind of one of those wild cards that's out there. But again, it is still, even though they're not in the quota system, it is still OPEC production, more OPEC production that's coming out of the market, production that now, particularly with the Red Sea issues, is flowing mainly into Europe. So that's an issue there. But then, of course, Europe can draw on a lot of U.S. production of both crude and products coming out.
Yeah, always fun to talk about oil markets and the drivers of oil markets. Anthony, thank you so much. That was Bloomberg's Middle East Energy Markets reporter, Anthony DePaula. Well, the International Atomic Energy Agency director, the IAEA director, General Rafael Grossi, says he will be personally leading today's mission to the Kursk nuclear power plant in Russia, given the, quote, serious situation. It comes after Russia fired more than 100 missiles and drones at cities across Ukraine yesterday, targeting energy infrastructure. Now, joining me now is Bloomberg's Jonathan Tirone. Jonathan, the IAEA last week warned of a Chernobyl-style accident at Russia's Kursk nuclear power plant. And of course, that does sound very, very alarming. What is the current state of play right now?
Well, Director General Grossi is on his way to Kursk. He's visiting because of the rising concern among the players in the nuclear power industry that any additional threat to a nuclear power station because of the war between Ukraine and Russia will have grave impact on the global industry at a critical point when more carbon-free power is needed to mitigate climate change. So he's on his way to assess the situation. The reactor in Kursk is unique because it uses an old, outdated Soviet design that does not contain some of the modern features of new reactors that would contain a radioactive release in the event of an accident.
And how does this specific nuclear power plant compare to the one in Ukraine, the Zaporizhia nuclear power plant that people were concerned about? What are the distinguishing features of the Kursk plant?
So it comes down to what's called the secondary containment structure, which is this large concrete and steel dome that is a feature at the Zaporizhia plant. It's a feature at most modern plants. You might have seen the pictures of EDF lifting this giant dome onto Hinkley during the construction process in recent months. That dome is there to prevent a radiation release in the case of an accident. It also would help to prevent an artillery or errant shell from entering and disturbing the core of the reactor. The fact is that because of the Ukraine incursion into the Kursk region, this very target-rich environment of the Kursk nuclear plant is in danger. It's not just the two operating reactors with the design flaws. There are also two very expensive brand new reactors that are under construction that I'm sure Rosatom is very concerned about. One of those is scheduled to come online at the beginning of next year. There are also spent fuel ponds. There are two additional reactors in the process of decommissioning. So these are very complex engineering sites with a lot of targets, a lot of sensitive sites, and the IAEA is going there to ensure that there's not a safety risk.
Yeah. And just quickly, how long is it going to take for them to assess all of these risks?
Yeah, I mean, the IAEA has had on-site presence at Zaporizhia for more than 2 years now, and the fact is that they are not able to unequivocally say who is responsible for the occasional drone or rocket attacks that have come near the periphery of that site. So we're not expecting a conclusive assessment today by the IAEA. What's more likely is that they'll develop a relationship with Rosatom and perhaps commit to more visits, essentially being able to monitor more frequently the risk at the site as the Ukraine incursion into the region continues and military conflict continues.
Yeah, very clear, and something we will definitely be keeping an eye out for. Bloomberg's Jonathan Tyrone from Vienna, thank you so much. Well, plenty more coming up on Daybreak Europe. Stay with us. We'll be right back. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Here's a look at some of the other stories we're following today. Apple has sent out invitations for a product launch event on September the 9th, where it's expected to announce details of the iPhone 16. The theme of the event, It's Glow Time, is a reference to the interface used by the new Siri digital assistant. Meanwhile, Apple says longtime CFO Luca Maestri will step down at the end of the year as part of a planned succession. He will hand the role to his top deputy, Kevin Parrick. And Edgar Bronfman Jr. is dropping out of a bidding war for Paramount Global. He submitted a $6 billion proposal for the entertainment firm last week, challenging an earlier offer from Skydance Media. Sources say Skydance accused Paramount of breaching the terms of their merger agreement by continuing to engage with another suitor. And coming up, BHP's full-year profit edges higher, even as China's uneven recovery drags on demand for iron ore. We'll hear from the CEO in just a few minutes. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Joanna Versace in Dubai, and these are the stories that set your agenda. San Francisco Fed President Mary Daly says it's now appropriate for the U.S. Central Bank to begin easing monetary policy, echoing Jerome Powell's view on cutting rates. More from our interview ahead. Asian shares sliding as focus shifts from the Fed policy outlook to Nvidia's much-anticipated earnings report tomorrow. Plus, Libya's eastern government says it will shut down crude output and exports as dueling governments fight over leadership of the central bank. All right, let's get a check on how markets have fared. And you can see from here that European futures are leaning towards the green. The FTSE 100 up about 0.4%. And even the Nasdaq, which closed down 1% yesterday, some nervousness ahead of those Nvidia earnings, also leaning towards the green, up about 0.1% here. I also just want to flag S&P now is 0.6% away from its all-time highs. The Dow has actually breached all-time highs. So a very far cry from where we were exactly 3 weeks ago when we were talking about that huge VAR shakeout with the catalyst was the Nikkei markets underperforming. And since then, we've fully recovered and somewhat more for most of these equity futures markets. Let's switch on, though, and take a look at some other cross-asset instruments that we've been tracking, and namely the pricing of U.S. interest rates. We've now, as we've been speaking about, got about 100 basis points of interest rates cuts priced in, about 30 basis points for the September meeting. The 10-year yield not doing a lot today, but sitting below 4%. 3.82 is where we're at. Dollar trading sideways, but still weaker. The theme has been one of weakness, especially as the market comes to terms with some of the dovishness that's coming out of the Fed, and specifically the Fed chair, Jerome Powell. And then Brent, we are slightly weaker today, sitting at around $81. But of course, we did jump 3% yesterday after it emerged that Libya was looking to stop oil production and reduce some of their exports. So that's having an impact on some of those oil supply numbers, which is why we did see that big jump yesterday in pricing. Now, speaking of energy, shares in Woodside Energy are higher this morning. That's after the Sydney-listed oil and gas producer reported net income for the first half year that beat estimates. But the company posted a 14% decline in underlying profit on softening LNG prices. Woodside's CEO Meg O'Neill told Bloomberg that the market is nervous ahead of a cold winter.
2022 was really anomalous. So that was the year of when the Ukraine conflict began, and that triggered a significant rewiring of global gas markets, with LNG needing to be pretty suddenly rerouted from other destinations into Europe to help Europeans keep the lights on over the winter time period there. What we've seen since in 23 and now in the first half of 24 is stabilization of prices. But what we're seeing in the forward curve, particularly in Asia, is actually a bit of a tick up versus what we would call a typical pricing level. And that's a sign to me that the market is finally balanced. Gas is a seasonal commodity, so when winters are cold, gas is often the energy source that gets called on in a disproportionate amount. And so the price levels that we're seeing in the forward curve for me are indicative that the market is nervous about a cold winter and what that might mean, and the customers are trying to get ready.
Well, that was Meg O'Neill, the CEO of Woodside Energy. Meanwhile, BHP is warning of more volatility in commodity markets as China faces an uneven recovery. The mining giant's shares rose around 2% after its full-year profit met expectations, despite lower demand for its iron ore in China. BHP's chief executive, Mike Henry, spoke with Bloomberg's Heidi Stroud-Watts.
BHP is a long-term company, and you can see coming through our results this time around this consistent year-in, year-out focus on operational excellence, and that's delivering industry-leading returns for the capital that we have deployed in the business. And we've revealed more this time to shareholders about the growth outlook for copper, which is an attractive commodity long-term. As the global population continues to grow, we see further urbanization, and the decarbonization thematic plays out. Now, in the very near term, what are we seeing by way of economic growth? The overall global picture is one of 3% growth for the next couple of years, similar to last year. We are seeing some momentum build in a number of the major economies globally, and of course India is set to remain the fastest growing major economy. In China, a bit of a mixed picture. We're seeing strong growth in a number of segments that are important for commodity demand in China, and that includes automobiles, machinery, infrastructure, shipbuilding. But the property sector itself, which makes up about 20% of steel demand, that is weak. It's been weak for some time. We've seen lower or fairly low levels of both sales and new starts. But the Chinese government is enacting policies that are intended to address that. And that includes relaxing some of the constraints on property purchases. There's a government program underway to mop up some of the excess inventory. And we expect those to start to have effect through 2025. All of that paints a picture of us remaining of the view that China is going to be able to hit its 5% growth target for the year, assuming that the policies that they're enacting get carried through. Now, for iron ore, what does that mean? Another billion-ton plus year of steel demand, reasonably healthy iron ore demand, albeit under a little bit of pressure currently. And BHP is very well positioned in this market, given that we're the lowest cost supplier. We've stretched the lead on the cost front yet again this year. And we're achieving better pricing outcomes than the competition. So certainly well set, even for a bit of short-term weakness in the market. And at a portfolio level, the company is really well positioned for the future.
Do you see further production cuts as being inevitable in China? Because we did see losses for Chinese steel mills deepening again in the last month. And does that impact, your forecast in terms of demand going forward? Do you think we've hit a bottom for steel mills in China?
Yeah, so what we've said is that we think steel demand is plateauing or is plateaued around 1 billion tons plus. And of course, there's going to be a bit of variability within the tens of millions of tons in and around that. And that longer term, we do expect that steel demand, just like as the pattern that's played out in all major economies as they've developed, that over time, once an economy moves past its steel-intensive early development phase, it will become less steel intensive and we'll see a contraction in steel demand. And over time, that will weigh on iron ore demand as well. It's one of the reasons why we've worked so very hard to set the business up for a future of more heated competition. We've moved to the bottom end of the cost curve. We've maintained that position. And we've improved the quality of the product suite that we're offering as well. And that's giving us great returns in the business. Near term, we're seeing a bit of price pressure, but bounded on the downside by a lot of high cost supply kind of sitting in the $80 to $100 per ton range. And it would take a lot for the market to push below that to prices that would be sustained at lower levels.
That was the BHP CEO, Mike Henry, speaking to Bloomberg earlier. Now, Bloomberg's commodities reporter, Martin Ritchie, joins me now to analyze these results. And I can't help but thinking when I listen to the CEO there that he's drawing a distinction between the old economy and the new economy. The old economy in China obviously being property, steel intensive, and for them a key source of demand for iron ore. The new economy being the electric vehicles, the green transition, and of course copper there is going to be the main asset that China needs. To what extent is China's old economy in this case and the weakness in the property sector casting a shadow over BHP's earnings today?
I think you've hit the nail on the head there, really, with the message that BHP wanted to send out. This wasn't an overly negative set of results. Certainly, the commentary was a little bit more downbeat than usual. And as you said, the Mike Henry, the CEO, talked about a major transition underway in China's economy. The key thing that they wanted to point out is that the property sector is a shrinking source of revenues for them. That number that he gave in the interview there for 20% of steel demand comes from housing construction. That's a very low proportion versus the boom years of the property market over the past 20 years. And again, this feeds into how he's thinking about the portfolio. I think he was asked also in that TV interview, will there be another bid for Anglo or anything of that sort? I'm not sure he answered the question directly, but he did talk about the need to focus on growing their copper portfolio because that's where the demand lies in future.
Yeah. One of the reports that I'm reading was saying that they did a quick keyword search on the report. The word copper appears 78 times. The word iron ore just appears 14 times. So that in itself is quite demonstrative of the strategy here. But to go back to your point about this emphasis on copper, where is that that growth going to come from? There was that failed bid for Anglo American. If not from acquisitions, where does the growth come from?
It's a very good question. What you pointed out was that the copper market this year and probably next is going to remain fairly soft because of that Chinese demand slowdown. As consumption from electric vehicles, from renewable energy, from data centers, etc., ramps up towards the end of the decade, mines are going to struggle. The BHP have some good quality assets. There will be other M&A opportunities for them, but in the copper market, these are fairly few and far between. But BHP should be, just by virtue of its size and scale, probably better positioned to take advantage of them than other companies.
Yeah. Bloomberg Commodities reporter Martin Ritchie, thank you so much for the analysis. Well, also coming up on the show, Chinese EV makers seek ways to get around European tariffs. We'll hear about XPeng's strategy coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, XPeng is looking for a manufacturing site in Europe as the Chinese EV maker tries to mitigate the impact of European tariffs. Chief Executive He Xiaopeng said in an exclusive interview that the firm is working with its partner Volkswagen to select a site in the EU.
Volkswagen has more strength on globalization, quality, manufacturing, and supply chains. We have more advantage on artificial intelligence, software, and electrical and electronic structure. So I hope we learn from Volkswagen's strength to make up our shortcomings.
Happy to say that Bloomberg's transport reporter, Daly Lee, joins me right now. Danny, just hearing about that, Volkswagen's Chinese EV maker is making moves into Europe despite the tariffs. What does this tell us about the impact of the tariffs? Are they working?
Yeah, I mean, for Brussels, this is good news, the fact that we have more companies, more Chinese companies looking to localize in Europe. But for someone like XPeng, an upstart in China, which has made waves in the Chinese auto space, it is very much seeing Europe as an important market that it needs to be in. And the fact that it has said Europe is going to be somewhere where it's going to look to build production is one of the first announcements it's made of having any production site outside of China. So it is important, and it's also important for Volkswagen. So XPeng is Volkswagen. XPeng is its Chinese EV partner here, and so Volkswagen has struggled in the past on its EV strategy, and for someone who's more adept at selling EVs and making EVs, someone like XPeng, this is good news to have someone in the European market who may be a little bit better at knowing what consumers might want, frankly. But yeah, this is an important step and for Brussels having a more localization.
Yeah, Danny, but it's not just Europe that have imposed the tariffs, of course. Today we've been talking about Canada also pushing back against the threat of Chinese EVs flooding their own market. But they're taking a more aggressive approach. So just walk us through what Canada have announced.
Yeah, Canada is announcing 100% tariffs on EVs specifically. And so it's very much aligned with its neighbor, the US, here on taking a tough approach, protecting a very core and key industry, one that creates a lot of jobs, generates a lot of revenue, but also there is the politics involved and a lot of votes involved. So very much Canada pushing back a lot harder, but it spreads from not just deterring the Chinese EV makers, but also to what they're selling, particularly when it comes to EVs, hybrids, and the subsidies that potentially are on offer. So there is a stronger pushback from Canada here, and it just goes to show the kind of choices countries are making when it comes to China EVs and tariffs.
And how significant are the Chinese EV imports into Canada to begin with? Is this more of a token move, a symbolic move, or is it actually going to bite economically as well?
I think it's more symbolic for someone like Canada because Chinese EV makers are not necessarily in Canada at the moment. And BYD, which is China's biggest and best-selling car maker, is looking to enter the Canadian market. But when you have a few markets which are closed out, there are still a lot where you can sell around the world.
Yeah, very clear. Danny, always a pleasure to chat to you. That was Bloomberg's Danny Lee, transport reporter. Now to some of the stories that are making news today. Telegram CEO Pavel Durov is being questioned in France over claims the messaging service failed to properly fight crime on the app. The Paris prosecutor's office is looking into allegations including refusing to help authorities run legal wiretaps on suspects and enabling the sale of child sexual abuse material. The magistrate must decide by tomorrow night whether to press charges against Durov or name him as a witness in the investigation and let him go free. And French President Emmanuel Macron is continuing talks on appointing a prime minister today. That's after ruling out a government led by leftist candidate Lucie Castet, who he said would have been immediately rejected by all of the other groups. In a statement, Macron says that he sees a centrist coalition as the most likely path forward. And SpaceX delayed the launch of a rocket set to carry 4 private astronauts who plan to perform the world's first commercial spacewalk. The launch, originally scheduled for this morning, was called off to check a ground-side helium leak. The Polaris Dawn launch has been postponed to tomorrow earliest. And plenty more is coming up on the show. We're just going to cut out for a little commercial break. We'll be back in a moment. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. San Francisco Fed President Mary Daly says she believes it is appropriate for the U.S. Central Bank to begin cutting interest rates. Daly told us that, quote, the time to adjust policy is upon us.
Well, to my mind, we've been on this path of ready to adjust policy rates for several months. We just needed to get a little more confidence that inflation was truly on its path to 2%. And I wanted to see the labor market come into balance, but I think that's completely happened. And the risks to our goals are now balanced, and the time to adjust policy is upon us.
Is there anything that could derail a cut in September?
To my mind, that would be hard to imagine at this point. I do see that adjusting policy is appropriate. We don't want to get ourselves into a situation where we're keeping policy highly restrictive into a slowing economy. And remember, every time inflation comes down, the policy gets more restrictive. And I think that's a recipe, if you will, for over-tightening and injuring the labor market and growth.
Well, the chairman and basically the Open Market Committee said coming out of the meeting that the downside risks are greater to unemployment than to inflation. How big are the downside risks to employment right now?
Well, that's the very important question. And so we definitely have to keep that in mind because, as you know, the labor market, when it starts to adjust, often has adjusted abruptly and significantly. But right now, we don't see any signs of that. You look at initial claims for unemployment insurance. You look at early indications of layoffs. They're just not present. And so that's not giving us any signs that there's a deterioration. Importantly, as you know, the Reserve Bank president spends a considerable amount of time talking to contacts, businesses, workers. We're really not hearing signs that firms are poised for layoffs. What they are doing is managing headcount, making sure that they really want to refill a job before they do it. But at this point, I don't see any warning signs of weakness, but we want to make sure that we are adjusting policy as we go so that it's ready for the economy we have and for the economy we're likely to get, and ensure that we don't end up in that situation where we see real weakness.
That was San Francisco Fed President Mary Daly there, adding to some of the more dovish Fed speak we've got the last couple of days. And, of course, Jackson Hole, a big catalyst for markets. We saw a strong rally in Wall Street towards the end of the week. And as you can see from this chart over here, remember that shakeout that we had a couple of weeks ago? Well, it's been completely and fully recovered now in the S&P. We're about 0.6% away from those all-time highs. So we have completely pared the losses that we're seeing. The Dow has made new record highs highs. And there is some nervousness ahead of Nvidia results coming out tomorrow, which is why the Nasdaq faltered somewhat yesterday. But speaking of, this is Nvidia, and take a look at that. The last couple of earnings reports, the stock has gained more than $200 billion in the one day after the report came out. So $277 billion of market cap was added back in February. $218 billion was added earlier this year in May. And this speaks to, number one, how huge the company is now. It's huge market cap. And number two, how much volatility, embedded volatility there is in that stock. And just reading another statistic put out by our team over here, Nvidia has actually dethroned Tesla to become the most traded stock this year, with an average of $40 billion worth of shares trading hands every day so far. And speaking of, Bloomberg will sit down exclusively with the Nvidia CEO Jensen Huang. That is on Bloomberg Technology on Wednesday at 11:30 p.m. UK time. So stay tuned for that one. It is going to be huge market moving. And as we've been talking about across all of our shows, it's going to be a big driver, not just for stock markets, but across all assets. And then finally, I just want to end with a chart that I thought was interesting, because we've spent a good chunk of the show today talking about new tariffs on Chinese electric vehicles. Electric vehicles, a big theme. But one of the other themes that came up from the earnings season is that car makers have been struggling somewhat with EV sales. And so look at the impact that that has had on those core materials that go into EVs. You've got the prices of lithium and cobalt slumping quite a lot, 20% over the course of the last year or so, and namely because of slower global EV demand. So that is really having a micro impact. It's not just macro, but micro as well on the price of some of these commodities. But there's going to be a lot more coming up on the rest of these shows. We're going to be speaking with former EU Trade Commissioner Cecilia Malmström about those EV tariffs. And of course, it's not just Europe applying the EV tariffs, but Canada as well coming out with their own announcement overnight, mirroring that of the U.S. Biden administration. So we'll be talking about EV tariffs. And then later on, we're going to be switching over to talk about the airline space with Ryanair's growth outlook. And that is with the CEO, Michael O'Leary. So stay tuned for those important interviews as we continue to piece together how markets are going to be trading into that all-important Nvidia earnings results coming through on Wednesday. And don't forget, PCE numbers on Friday, two major drivers for U.S. and global markets. Well, that was Daybreak Europe. The opening trade is up next. This is Bloomberg.